So again, my name is Deborah Gallant. I'm at Entrepreneurship for All. We are all about helping entrepreneurs grow and sustain their businesses. This deep dive is called the Financial Wellness Year-End Checklist. The workshop will go from 4 till 5:30, and we have guest presenters, as you've heard. And it's was being presented by E4All until I moved over to Entrepreneurs Forever. So I know they're friends from both organizations, and you're both welcome. You're all welcome. We're the only U.S. small business program like it because we try to help people beyond the early stages by having these peer support groups. And my job as the manager of program innovation is to create some additional programming that's available for you that helps you on all kinds of different subjects. So some of you may have sampled some of the stuff I've done before. If this is your first time, you are more than welcome. We have our peer-to-peer model. Many of you are in one of our groups. It's about 10 to 12 business owners who've been in business at least a year. They meet once a month for 2 hours. They have a membership hub to connect with each other, and they work through a curriculum with a trained facilitator. And we support our entrepreneurs through all stages of the journey. E4All runs pitch contests on the accelerator, and then they hopefully graduate into one of our peer-to-peer groups. So these deep dives are once a month on Mondays between 4 and 5:30. First, there'll be a presentation by our guest presenters. We record the presentation by the guest presenters, but we then turn the recording off so that there's time for open Q&A. Especially when it comes to a topic like your numbers, you might not want this to be recorded for people to watch in perpetuity. So this is a safe space for you to be able to ask those questions at the end. But this is a disclaimer. This presentation does not take the place of professional advice from your own paid advisors. So Cindy and James are going to give us a really great presentation. But if you're really stuck with your end of the year numbers and this brings up some issues for you, and we highly encourage you to hire your own advisor and work on that. So our visiting experts, Cynthia Underwood and James Carter, are in our Homestead group, which is one of our Entrepreneurs Forever groups. And when I met them, when I was visiting the group, I was like, you guys would be fantastic. And they met and started working together. They're going to tell you more about themselves through one of our groups. So I'm going to actually, if I can figure out how to do it, this is the worksheet that they're going to be working along, and I will drop it in the chat if I can. Here we go. And you can download your own version of it. I'm going to go back here. And they will not be reading the checklist, but the checklist will be helpful to have as you go along with it. Before I hand it over to them and share screen, I just want to tell you, we do these deep dives every month, usually the 3rd or the 4th Monday of the month. Next month is a pretty interesting one. It's about creating standard operating procedures in your business, which is SOPs, you might have heard people say, and I have an expert who helps businesses write those coming to do the deep dive on December 12th. So I highly encourage you to come to that one. You sign yourself up on our website, and we have deep dives that are recorded and archived from previous sessions that are all available on the website between E4All and Entrepreneurs Forever. So you can find those there. I am now going to stop sharing, and let's see. Cindy, do we have James here and able to present? He's just logging on now.
If they help, James, come on here.
Yeah, I mean, I've tap danced about as long as I can. So we actually do need him to join us. I'm sure that if I bring the slides up, you could speak to them, but it's always a little more empowering to run the slideshow yourself. And I see that another one of your BNI friends has joined with your name as their default. If you don't mind changing your name, Cindy, you're all over the place otherwise. He doesn't look like a Cindy. All right, James seems to be having trouble. Do you want me to just bring this up? Let's see.
I see him
I see him now. Let's see. I'll make him a co-host. And he's connecting to audio. Thank you for hanging in there with our technical issues. James, you are now made a co-host. So if you hit that share screen at the bottom of your screen, you should be able to bring up the deck.
Did you say, oh, there he is. Take yourself off mute. I'm gonna hang
And you're
up
muted.
now. Okay. I think you may have to run the slides, Deborah.
All right.
He looks like he's.
Yeah, Deborah, if you can run the slide. Good
Yeah.
afternoon, everyone.
Uh-huh.
Oh, look, that's a nice picture.
Yeah, it's a great picture, but see, this is what happens with me and a Mac is that I've now lost the deck, but I'll find it again. No worries. There it is. There it is. Okay, view slideshow.
Fantastic.
Thank you, Deborah.
Uh-huh.
Okay, wait, that's not the.
Ooh, why is it looking like that? There it is.
Oh, it's coming in now.
Oh,
Okay.
you guys actually put animations in it. That's amazing. Okay, there we go.
My daughter actually did that. Hello, everyone. We'll get started now. James, are you good?
Yes.
Okay. Sorry about the technical difficulty. Thank you all for coming today. And I'm just going to begin by introducing ourselves. And this first slide you see, we like to bring up just to show people that we do have some things we enjoy in life, and this is why we do what we do. My name is Cindy Underwood. I'm the C in C&J. Just a little about my background. I'm a retired agent from the IRS. I worked almost 30 years. The first 3 years I was a revenue agent, and the last almost 27 I was a criminal investigator. So, and with that background, I did a lot of investigations, audits, and dealt with a lot of small businesses, and became very, very passionate about small business owners. So I left the service in 2018, and then I met James Carter, and we realized we met at a college function, networking event. We both were accounting majors, and we hit it off very well. Eventually we formed C&J, and in C&J we help small business owners. We do business plans, we do grant writing, just pretty much anything you could possibly want done with a small business. Between the two of us, we have over 50 years of accounting background. And James will go a little more. He has operated his own business for several years. And so with that being said, I'll pass the baton to James. Oh, just a little about the pictures. The two girls with me, young ladies, are my daughters, Felicia and Casey. And then the other one I'm pretty proud about. I love playing golf, and I won first place in a tournament. Take it away, James.
Hello, my name is James Carter. I am the J in C&J Financial Foundations. I have over 25 years of accounting experience between construction, engineering, banking, and various other operations. I graduated from Thiel College with my accounting degree in 1995. I've been in the Pittsburgh area since 1996, working in various industries. In 2007, I started my business, Books and Balances, as a way to help low-income people save money on the earned income tax credit. So I kind of had that little target market, and over the course of time, I kind of developed and started working in bookkeeping and working with small businesses in their development. Started my own the bookkeeping phase of my business back in 2015. A number of my clients I've actually worked with in various industries in the past. So aside from having a good client base of about 5 to 7 good hardworking individuals, also an accounting and business manager at Tutelage Residential Services out in Penn Hills. Just to explain some of the pictures. The one is a nice walleye catch I caught back in like 2019 up on Lake Erie. And the other one is a picture I took my girlfriend Angie out for a carriage ride for her birthday, probably a year or so later. Favorite activity, favorite individual, and looking forward to getting to know some more people in this session. So Cindy is going to kind of run down some things on our agenda, and we'll get this thing moving. Are you there, Cindy? Cindy, you're muted.
Sorry, I apologize. Basically, what we did is we tried to take some topics that are very common for business owners that you deal with during your year end. And we tried to put in an easy to follow format, and hopefully you'll enjoy some of the slides. So our overview is our checklist, which Deborah will put into the chat so you all can have a copy of it. It actually has check boxes, so you could use it as a kind of like an outline and guideline for some of your end of the year topics. We have some scenarios to go over for both profit and nonprofit. And we also will hopefully have enough time for some Q&A at the end. So basically, step one in this process is to gather your financial records. Now, you see that guy up in the corner, you do not want to be him at the end of the year. That's a very stressful thing to have to come from your shoebox. We call it the shoebox method when you don't really have order to your books and records. We really encourage you to do it throughout the year, but if that's where you find yourself, we sort of have a guideline that we think would be great for you if you go to the IRS's website, but we actually have a copy. We're going to drop that in the chat as well. But if you follow the Schedule C, it's a great format to take a look at your income and expenses and to kind of put some things in order. That's a great guideline. Some of you may be more sophisticated and have accounting software, which you can go into that and gather your reports and records a little more easily. So if you have all that up to date, then the next thing you'll do is get that stuff prepared. Most of you probably have a return preparer, but if you don't want to do any of that, we suggest you hire a bookkeeper and they'll help you get some of these things in order as well. Next slide, please. So James will go over a little more. He loves the technical aspect of our business, and so he'll go into explaining what this slide is.
So this is your basic, I won't call it really basic, but this is a chart of accounts. And a chart of accounts is really a place where you're going to organize your business from a financial standpoint, and where you're going to, and imagine these as little buckets that you could put all your receipts where to have those categorized. If you label each bucket, you can dump every receipt into each one of those. And not that your tax preparer or anyone else would want to see that or see all those buckets coming, but it's a good way to kind of have everything separated and organized. And the chart of accounts is created based on your business model. And it's really everything that you have set up from a revenue and an expense category to where your money either comes from or goes. Next slide, please.
So James, this is not going to be the same for every business. And if you have not been systematic about keeping records for the year, this is just sort of a starting point, but you might have things that don't fit any of these, like, I don't know, training or new equipment that you bought. But are you saying that these categories would cover everything?
No, this is, like you said, just for starters. But actually, if you really think about the example I use is the example I use is buckets. So you're going to throw your receipts in buckets. What do buckets do? They overfill. So you actually have to find another bucket and label it differently because this one bucket is too full of all your receipts. So once you get to a point where you might have to break the category down a little bit smaller, and you said training. Well, if for some companies, it might be different levels of training that you might need to break that number down. So it's a matter of, again, it's still how your business operates and really tailored to the owner of what they really want to identify as important money issues. Well, again, whether that's coming in or going out. So the next step is to kind of determine your financial position. You've gathered all your receipts, whether it's for money you've paid out or for money you've brought in. You've gathered all your receipts, and it's like, well, gosh, what do I do with all this stuff? You can, categorize everything, and you can take a whole big thing of receipts to your tax preparer. Again, he may not like it, but he's going to bill you to go through everything, add everything up, and fill out that Schedule C and send it off to the IRS. The best thing to do is maybe break everything down into like transactions, total everything up, and take it to that person. Or, as Cindy said, you could have that Schedule C available, follow that as a guideline, categorize your transactions that way, and take that to a tax preparer. The next level of that process is creating reports for outside entities to review. Those outside entities may be investors, they may be banks looking for loans. And what they're going to ask for is a P&L and a balance sheet. The P&L, more commonly known as an income statement, itemizes your revenue and expense transactions for your determined period, which is usually a year, longer, or sometimes shorter, depending on what your need is for that report. It's everything that you brought into your business and everything that you spent for your business, categorized individually to show what your income is after all those things are done. The balance sheet categorizes what the business has. And basically what that means is the business has cash, the business hopefully has assets, vehicles, supplies, office, things of that nature. So the balance sheet categorized properly will tell any external reviewer what those assets are and what is owned by the company. That can also include debt, which also shows on that document. The main thing that individuals are looking for is how much money you have left after you paid everything, and if you had to liquidate the business, how much money is owed to you and how much money do you still have to pay out. Next slide, please. This is a good example of an income statement from one of my clients. The one thing it's not exactly as clear as I would like it to be, but the one thing you'll notice is that this client made about $16,000 in net income at the end of the year. The other thing you may notice is that there is no payroll number on this form. So this client actually did not pay themselves. So at the end of the year, they're looking at a situation where over the course of that time period, they put all their blood, sweat, and tears into a business for $16,000. This is a client I definitely want to talk to before everything gets started, so we can kind of advise them, as far as what's happening at the end of the year. It's not a bad thing to make money, of course, but there are ways that we can help this client out to maximize their revenue, because now at this point, they're paying taxes on $16,000, but that's all they made. So you want to have some strategies built in to kind of guide them along, even if it's just a matter of addressing your revenues to see if you're making enough money based on your price list, or maybe reducing some expenses. Next slide, please. Here we have an example of a balance sheet. Same client, same time period. This is what the client owns as far as the business is concerned and any debts that they may have. The one thing I wanted to kind of highlight in this is that, you'll see there's an owner's draw section near the bottom of that second half of the page. The client actually took out a little bit more money than what they made for the year. Therefore, again, was their business operations enough for what they were doing? And we kind of go through a process where we look at, again, what they're charging and what their expenses are to see if we can maximize their results at the end of the year. Next slide, please.
I just want clarity on one thing. So they took an owner's draw but they didn't take a salary, but they did take some money out of their business this year, right?
That is correct.
Okay.
So James wanted me to cover this part. He seemed to think I knew a little bit about this coming from the IRS. Basically, your estimated, your taxes should be paid throughout the year as you earn income. And so if you're self-employed, that means both on the income you earn and you owe additional self-employment tax, whereas most people have withholding and that covers their withholding. But when you're self-employed, you earn a different type of income than an employee. And so the IRS expects you to make those payments throughout the year. They're the only taxing body that will penalize you if you don't. And so we suggest that you build it into your budget. And if you so happen to have not done that all year and you find yourself stuck at this point during the year and you haven't made your estimated tax payments, the biggest thing would be is to try to do that. But the IRS also has a system in place where you could go in, and they call it an offer and compromise. You could set up payment plans with them. But my thing when people have IRS problems, I always tell them to appeal whatever that process is, because sometimes you can get the interest payments wiped out or lowered, if you have a good reason. But I suggest you pay it because the interest runs daily. And so you could end up with a pretty big tax bill if you don't at least make some attempt to deal with that issue. We also suggest that you put your state and local taxes in your budget to pay during the year so that everything doesn't hit you at the same time. And the biggest thing, the IRS is not there truly to put you out of business or to put you in deeper debt. They're just there to collect the correct taxes.
So Cindy, the answer to the third question here, what if you've ignored taxes all year long? The answer is make some payment and show goodwill. Is that what you're saying?
Right. And then contact the IRS as soon as possible. They're usually pretty good about trying to work something out with you. Just coming from my background when I was a criminal investigator, we would actually go in on search warrants into businesses, and that business would be open the same day. Like, we weren't there to shut the business down. We were there to collect whatever information we needed to get. However, you would see that same business open the same day. So the intimidation of not dealing with the IRS, I know it's tough sometimes, but truly they're there to try to work it out, because if you don't open your business or if you don't attempt to pay your taxes, that's what our government runs on. So
so you make it sound like it's obvious to know what to do. Like, do you literally call your local IRS office and say, I'm a new business and honestly didn't think about taxes, and now it's almost December, what should I do? And they'll tell you?
Yeah, you can call. Actually, they have telephone, and they still have walk-in services. So you can call and schedule an appointment and go in and meet with someone. So it may not be as simple now because of staffing, but it truly is, if you can get through it and get a walk-in appointment or on the telephone line, they will work it out with you.
Okay, thanks.
Mm-hmm.
So we're going to take a look at a couple of scenarios. So on one hand, we had, an individual that made money at the end of the year. This is a little bit different than the profit and loss example that I showed earlier, because that person really didn't make money if they didn't pay themselves. So if all debts are cleared and money is still in the bank and sitting there waiting for you to pay your tax bill, a couple of things that can be considered before the end of the year. You could build morale with your company, of course, and pay a bonus to some of your employees, or all your employees. I don't want to say just some, and the owner. That is a taxable event. And, you make, Christmas bonuses and things of that nature, which is why most companies do it. They kind of spend down some cash that would go to the tax man anyway. You could acquire some new assets. The main thing to think about, my guy Nate, who's actually on this call as well, wanted me to make sure I say that the IRS considers a new asset is something that costs $2,500 or more. Anything else is just a written off expense. You can invest in software upgrades. Some new QuickBooks software to run your business. You can upgrades in software security, protect your business, educating your employees and or yourself for a new business line that you're taking on for the next year. Next slide, please.
Could you prepay next year's training that doesn't happen till next year, but you paid it this year?
You can. Now, you can also, as someone actually put on there, you can also absolutely invest in a website. As someone put on the chat, that's a great comment. Thank you very much. As far as the prepayment for your training, if you think about it, it is a prepayment, and the IRS will want you to put that on your next year as far as the expense side. But there are some companies that will take a down payment in that current year, and you make the rest of the payments throughout that training cycle. Just depends on that what that training is. But that is absolutely a good option. The reverse side, our person here in the red, Fred. The thing you want to think about on that is basically if you are where that one client of mine was during that year. You look at it, you haven't paid your taxes, you haven't paid yourself, but you're showing that you have net income. That's not real net income. So what you want to go back and look at is look at your budget for the year. Look at moments in time where things could have gone awry. For most people, and very popular in our mind right now, is COVID. That changed the way a lot of businesses ran, and also increased costs, especially in the short term. You want to look at your pricing. Make sure your costs are what they are, haven't gone up or changed on you, but also look at those costs from a standpoint of what you're billing for your service or your activities. We don't want to go into the habit of working for cost or a couple bucks above cost. If you're not billing 2 to 3 times what your costs are, you will not be in business very long. Next slide, please.
Now, James, let me just ask you a clarifying question on this, because you and I talked about this before. When you have a meeting with your own personal accountant and you're getting to see whether it's a good year or bad year, you do things like take capital losses and move it all into 1 year to make, 1 year better, 1 year worse, those kinds of things. That doesn't really apply in a business, right? It's not like you should have a worse year this year so you could have a better year next year. That isn't the same as you would do on your own personal stuff, right?
Oh, absolutely not. Businesses, well, let me kind of clarify that. You actually can. There are ways that you can in the IRS code that will allow you, if you're taking a loss personally and you get a big fat check back from the IRS as a refund, you can push some of that money off into next year and say, well, I don't want all that refund now, I'll put it on next year's taxes. For a business standpoint, of course, you don't want to lose money, but if you're making money, there are legitimate strategies that are not tax evasion that you can kind of write off some of those expenses through the year. And basically what you're doing is just kicking the can down the road. Or in some cases, you can have a loss for your business and push those forward. What you don't want to do as a business, especially as a business, what you don't want to do is show a loss for an extended period of time, because the IRS will change the nature of your business and tax you differently. More specific, they'll change you into a hobby and won't allow all those expenses as a loss as you did before. But you definitely, this is something you want to, we call it a year-end checklist, but this is definitely something, parts of at least, you want to go over throughout the year so you can assess where your business is and how you're going to kind of end up at the end of the year, especially in the case of, your pricing and, reviewing some of your expenses.
Maybe this is a question for Cindy, but how many years is going to trigger that this is a hobby business thing? How many lost years will get them to say, wait, this isn't a real business?
Usually, I think the rules of thumb, and we have Nate online, he practices more in this field, but 3 years, they'll look at 3 years, a pattern in 3 years, and if you haven't shown some profit, but then they'll look at how you're conducting your business too, because sometimes some businesses take a little longer to launch based on research and development and different things like that. So I told Nate, like maybe toward the end, the more he could probably chime in on some of that. But usually a rule of thumb is 3 years. You should be showing a profit, in that time period.
Thank you.
Mhm. Okay. James, you want to do the nonprofit or?
Sure. The other type of organization we wanted to kind of take a look at, it just briefly, is nonprofit organizations. You can still make money as an NPO or a nonprofit organization. The goal of the business is to fulfill the benevolent goals of that nonprofit. So making money is a good thing. The form that the nonprofit uses is a Form 990, and that basically, and either you made money or you didn't. But if you did make money, the goal of the 990 form is to say, hey, these were our goals for the business. And since we made money, this is how much we pursued with those goals, and this was the outcome. But the main thing to look at for year end from a nonprofit organization is, number one, how we operated. Number two, what we did with our funds when we made them, and does those pursuits line up with the goals of the charter when we initiated?
Right.
Next slide, please.
This is always the fun part of the year, getting ready for our tax preparer. I love this guy on the slide because that's how a lot of us look sometimes at the end of the year when it comes to getting things in order. And we really don't want you to have that feeling at the year end. So if you work through some of these things on this checklist throughout the year, this will make that process a whole lot easier. And getting your documents together and ready for your return preparer, we just highlighted a few of those. Your payroll documents and other information items, like your W-9s, W-4 forms, 1099s. These are information returns that the IRS requires. And most of those are due, like the 1099s are due by January 31st of the following year. So you want to make sure earlier in the year that you have the tax ID numbers for people that are due 1099s and your employees, that you have correct addresses and the information to report to get their forms to them. You also want to get your loan documents together. So like James reported on the balance sheet, that those things can be reported correctly when your return gets done. The same with asset acquisitions, your contracts and leases and all those types of documents. And like James said earlier, if you have purchases that are over $2,500, you want to make sure you have those in order because you're going to have to depreciate those items over time. Next slide, please. We put together this list of different assistants and advisors and support for your business. These are not all inclusive, but these are some of the major advisory roles that you would need in your business. The most important one, I think, on that list for year and for these purposes would be your accountant / bookkeeper, tax advisor person. They're going to help you with this whole process. We definitely suggest that you get a tax advisor who can also help you with tax planning and that thing throughout the year. Your accountant and tax advisor may or may not be the same person, but you definitely want to take a real close look at who you choose for that role. James will go a little more into our scenarios over those.
Okay, so we actually got a question in the chat, which is a great one. For those very small and early, I'm sorry.
Go ahead.
Oh, okay. For very small businesses and early in the process, what you're looking for is basically step one, is to make sure you have everything organized and succinct. Most of the time for that type of individual, you're looking for your tax preparer. You're going to make sure you're organized, and you're going to call your tax preparer at the beginning of January to schedule your appointment. There are what really drives this is money, of course. Again, as this question came off, a small private chef likely doesn't need a bookkeeper, likely doesn't need an accountant. They need a tax preparer at the end of the year. They might need to talk to a bookkeeper to show them how to categorize everything if they don't want to look at that Schedule C, of course, and keep everything in order so that they could take it to their tax preparer. I've done this work sometimes for people starting out. I meet them at the beginning, and I might talk to them at the end of the year, once a year, just making sure they're organized and ready to go. What you're looking for is just to make sure you're organized and to go see your tax preparer. If you're making a little bit more money and seeing that you have a lot more money on hand, and that also makes you nervous because maybe you haven't paid your taxes and don't know how. Maybe you don't have everything organized. You might want to have a bookkeeper on hand to make sure not only is everything categorized properly and you know exactly what your business is doing, but also a person that is able to set up and make those quarterly tax payments for you. Now, if you're in that situation, you may have an accountant overseeing everything at the end, or you might have a tax advisor that is just speaking to you and your bookkeeper to understand what's going on and can advise you on the tax implications for everything you're doing throughout the year. So you can have on hand or just on retainer one individual that can do all these things for you. Or some larger companies actually have, this spot filled by 3 different people, totally up to the convenience and the checkbook of the owner. If you want to really think about it, our main referral for tax advisory service is Nate, that is on this call as well, Nate Jackson. Cindy, throughout her career, is equipped and skilled to be a tax advisor, tax preparer, accountant, and bookkeeper. She wants to do none of those things. She likes consulting and analyzing businesses. I am skilled and equipped for all 3 as well, but I leave my wheelhouse in the bookkeeping and accountant.
Do you need to have a tax person who's in your state? I mean, is that really important? Because
it's not necessary. As long as
I've moved across states, and I've always wondered, do I need to change accountants?
It's not necessary. Most tax preparers are skilled. They get certified for the federal returns. That's the big entity. Most know the rules between most states, but they will let you know, or should let you know, whether or not they can operate in those other states. Again, Nate put in the chat, his only exceptions for tax prep work and advisory is California, and New York. Totally different animals, as everyone can imagine.
Mm-hmm. Let me just add a little bit to James. Like you said in the chat, we do have some other partners on the line. We have partners that deal with your technology. I see Peter does marketing. Like Joe Nardone's on the line, and they can help you set up software systems, security systems, and other tools to help you in your business and to help things flow a lot better. We do referrals for these types of businesses. So if you need other assistance, we probably could guide you in the right direction for those as well.
Yeah, and the thing I'd like to say, just from my perspective, I don't live in the Pittsburgh area like you guys do, and I've lived in different places, is that I've always wanted to make sure that my bookkeeper, because I'm definitely a shoebox person and I knew I wasn't going to do it myself, my bookkeeper talked at least once or twice a year to my financial advisor slash tax preparer to make sure that the records that I kept for the whole year were in compliance with what she needed to file them. Because even though you're like the general contractor, you want your plumber and your electrician to talk to each other so they don't, put the plug right next to the sink kind of thing. So they need to make sure that they're working together. So don't try to do it all yourself. Have them help you help each other.
Absolutely.
Absolutely. The one thing I stressed, or I'm hoping to stress, is the difference between a tax preparer and a tax advisor. Again, the tax preparer, you call in January to set up an appointment. Your tax advisor, you should be contacting no later than June to set up for the next year. Just to make sure that everything you're doing is lined up, as you said, Deborah, so that you're ready, number one, to hit the ground running. Number two, not to have to worry about that year's taxes when you're also concerned with the current, you don't want to worry about the prior year's taxes when you're also concerned with current year operations.
And I will also say that there are times when it makes sense to stop and make sure you're the right kind of business entity. And that's getting your attorney involved with a conversation with your tax advisor and accountant, because again, lots of people start small and they just pass through things, doing it as a DBA, doing business as, and there may well be an option or a point where you go, this doesn't make sense anymore. But if you don't stop and look at it, you're going to keep doing the same thing all the time.
Absolutely. Part of your, that's part of your year-end review. Should be is also reviewing your operations to make sure that when if you're pursuing another business line, or if you're just looking at something different, you want to make sure that you have your business is properly set up to pursue those goals.
Mm-hmm. Right. And as we're discussing throughout this year, checking in quarterly is a good rule of thumb and a good habit to have as far as your business goes. And because you can check the health of your business throughout the year instead of waiting until something happens. Getting organized is a big part of that process. And then once you get to this point and you've gotten all this in order, you can move into your goals for the next year. And that after you've done all these things, you can see that goes in a certain direction, whether you were profitable or not profitable. But then you can take a look at, okay, what am I going to do differently in the next year to make that profitability go up or to get profitable? So once we finish this whole process, and by year end, you should be able to take a look at your targets for next year to create new objectives, and all that should update into your business plan and your budget analysis, and then your expectations of what your business is going to do in the following year. And
another great thing to think about is the big difference between, you can go ahead and move that slide forward. There is a difference between tax avoidance and tax evasion. Tax avoidance is completely legal and proper, and is really called proper tax planning. If you really think about it, a big name sometimes is Donald Trump, and when it comes to the tax code with his various businesses, but he has not been brought up or at least charged with any tax fraud, at least to my knowledge. So everything, he keeps accountants, CPAs at his disposal, and I'm sure there's multiple ones working in his businesses. On the flip side, I read a story recently where Tyler Perry fired a fleet of his accountants because the IRS owed him $9 million. That is not proper tax planning, and I completely understanding. And I would give him my number to add me to his new fleet if necessary.
I wonder if your colleague Nate wants to add any thoughts or tips of his own before we wrap up the recorded part and we go to questions.
Right, I was going to say that. Nate, unmute yourself. Maybe he stepped away. Oh, there he is. Hi, Nate.
Sorry, guys, I took a phone call here real quick.
Mm-hmm.
We just wondered if you wanted to add anything to the wisdom shared by your colleagues before we stop recording and go to the questions.
And the only thing I would add on the tax perspective of things, and kind of just to do a real quick overview of everything they talked about, the IRS tax code is not, it's rigid in the sense that if you don't follow it and you knowingly screw up or you knowingly avoid trying to pay tax, you're going to get caught. But it's also flexible enough to understand that, let's see, Peter, your business isn't the same as Joe's business. That isn't the same as Carrie's business. That isn't the same as Debbie's business. So it's regular and reoccurring transactions that are specific. It could be specific to your industry or even specific to your business. And to James's point at the beginning, when he was talking about the profit and loss, you can get as granular as you want or as high level as you want with those categories. Everything flows into about 15 line items on the tax return, regardless of the business structure. And it pretty much those 15 are pretty much the same, whether you're a DBA under a Schedule C, which would be the private chef question that came up in the chat, or you're a partnership, or you're an S corporation, you're a C corporation. Those categories are pretty much the same across the board. It's really how much how granular you want to get with watching your business expenses on that side. To touch base real quick about what James said and kind of expand upon it, that $2,500 mark, it's single items, $2,500 or less. So like, say you buy a laptop for your business. If that laptop is $2,700, that's one singular item, then you have to depreciate it over time, meaning that you write off that expense in increments over the next, say, 5 to 7 years. Whereas if that $2,700 transaction is a laptop and a printer, now those items probably aren't $2,500 each. That's the number. Those can be put on the profit and loss, and you get to take that expense in the year that you purchased them or they went in service. And then to speak to the to payroll real quick, it's a little bit late in the year to, if somebody were to come to me and say, hey, I'm an S corporation, I've taken $10,000 in distributions, I just wrote a check to myself, but I didn't run any payroll. It'd be a little late at this point to try and set that up and try and avoid some of the issues you have with taking too much distribution versus payroll in an S corporation. But there are ways to kind of mitigate those penalties and interest that you would incur for not making estimated payments, which speaks to what Cindy was talking about. Those estimated payments are due, and if everybody wants to write these dates down, these are important dates, they never change. April 15th, July 15th, September 15th, and January 15th of the following year. Those are the first, second, third, and fourth quarter dates for estimated payments. There are ways to avoid those. Thanks, James. There's a ways to avoid those, but for the most part, those are dates you want to kind of keep in your brain as an entrepreneur or as a new business member or a new business owner. And truthfully, any business that incurs more than $600 in federal income tax is required to make estimated payments. I know that's a very low number, but that $600 amount you're going to find is pretty much static across a lot of reporting requirements for the IRS. If you pay a contractor or an individual $600 or more in a given year, you have to file a 1099 with the IRS for non-employee compensation or miscellaneous compensation. So there's that. I don't think there's anything else we went over. The tax advisory, James, thank you for June. I appreciate that. I was really worried you were going to say like September or October when you said talk to your tax advisor. And to be very frank with the folks and to be professional about it, just remember there's very little you can do outside of the fiscal year. Everybody's fiscal year typically ends December 31st, unless you elect for a different one. There's very little you can do to mitigate your tax responsibilities outside of the fiscal year. That's really all I'd say to it. So I appreciate the few minutes, Deborah.
No problem. And can you help me understand, if I wanted somebody who, you call yourself a tax advisor, is it a once a year engagement that I work with you? Is it an all the time? I mean, what does an engagement with a tax advisor look like?
So it can look like whatever you want. Obviously, there is cost to it to an extent, and it can be as specific as you want, or it can be as high level as you want. At the minimum, I would want to talk to one of my clients at least quarterly. in the sense that once you get a few quarters on the books, you can really start to see trending of where the business income and expenses are going. But it also has a lot to do with the size of the business. I obviously don't want to meet quarterly with a brand new business that has no idea what the revenue is going to be, because you may not even have an estimated payment requirement by the end of the year. Or, say you just formed your business a couple months ago, it's other than having that initial conversation with where you think things are going to go, there's not really any reason to talk before maybe January or February of next year. Whereas we go to the other ways, and several of my clients are in the $1 to $5 million a year gross revenue space. I have conversations with them monthly on where their profit and loss is going to be, where their tax projections are going to be. And some of those clients are regular recurring revenue. Another client, there's a couple that are legal services that get huge checks 2 or 3 times a year. And we don't necessarily know when those are coming in. So we have a multiple scenario type deal in place with those guys. Like, hey, if it goes this way, we're going to do this. If it goes this way, we do this. If it goes this way, we're going to do this. So and it's very personalized to the individual or the client on my end when it comes to that advisory work.
Thank you. And James and Cindy, I do want to give you just a moment or two to talk about the employee retention tax credit, which has an end date on it. And I know you guys are getting involved in that. Anybody who's part of Entrepreneurs Forever might have read in the newsletter that we sent out that this is a pretty interesting program. Even if you got COVID relief funds for Paycheck Protection Plan, this is still available if you kept people employed during COVID. So do you want to briefly explain what it is and why you need somebody on the outside to help you with it?
Yes, the employee retention credit was, it came about out of the same act, the CARES Act, that the PPP and the EIDL came out. However, at that time, if you filed for PPP, you couldn't get the ERC. So last year, in November, the government changed the rules since only 18 billion out of the 400 billion that had been set aside had been given out. So, now what they're saying is you can file for the ERC, which is almost like a reward for you keeping people employed, anywhere from 1 to 499 employees. You can file for the credit. You might say, why hasn't my accountant come to me with this program? Well, they're looking at the old rules where they couldn't and you didn't qualify. And so I wouldn't be too hard on them. However, I would go back and revisit, because businesses are entitled to this program. It ends, so you're entitled to it for the year 2020 and the year 2021. The year 2020 ends April of 24, and the year 21 in April of 25. However, the government could change the rules at any time. I would not allow that credit to sit out there. If you're eligible, we have an instant way to qualify you. We have a partner that processes these. They've processed over 5 billion to date. They're experts in this field. So definitely give James and I a call to take a look.
It's a lot of money. It's $26,000 per employee if you kept them on payroll. So I don't know if it applies to anyone on this call, but I know it's one of the things that you guys do. So I wanted to give you a chance. Do you have any sort of final summation before I stop the recording, and then we'll just go to questions if folks still have them?
I think James did a great job with all the technical issues. If you're a business owner, I would just say get the proper team in place, whatever that team is, whether you need a bookkeeper, a tax advisor, an accountant, you definitely need those, but then you also need the technical aspects, the marketing. But I would just say visit these things throughout the year. Don't wait till year end. Use this checklist to help alleviate some of the pressures, and just go take a look at it. I think it's a pretty basic checklist that'll help you put some things in perspective. That's pretty much all I have, James.
I would say have, kind of interview everybody. If this is, look at the team that you might be putting in place or needing at some point, and get in those circles and get to know those people early, so that you don't have to learn to trust an accountant with your, with your financial life. You don't have to learn to trust a lawyer with your legal life and all those things. Get to know these people early as you grow your business, so that when it's your time to pull that trigger, or you need that advice, you're comfortable with what you're getting and the person you're working with or building relationship with at that point. As we say in our group, you want to do a lot of farming instead of hunting and gathering.
I like that. All right, I am going to stop the recording